Hi everyone, so today we're going to be doing a new stock analysis video, and I'm with Dom and we're going to see what the company does and their current earnings, and Dom is going to go ahead when he's ready.
Thank you.
Okay.
Let me know if you can see my screen.
Yeah, perfect.
Cool. So Dynatrace is kind of like a little bit of a catch-all of a platform. So we'll kind of just dive right into it. So they say Dynatrace is an observability platform to analyze, automate, and innovate with the power of AI. I guess everybody's got AI now, so might as well build your business around it. It says that the system helps prevent problems, automate workflows, and deliver better, more secure software faster. And then kind of go into a little more detail. That they use casual AI to automate dev spec ops at scale and deliver precise answers teams need to innovate and thrive in a modern cloud. They break down team silos and proactively prevent issues before they affect end users. They help solve critical digital challenges with observability, security, analytics, and automation solutions in one place. The article continues kind of give like a bigger snapshot of all the different areas that they can essentially help out with their platform. So infrastructure for observability, excuse me. They're going to be saying that word a lot today. Application observability, digital experience, AI observability, log analytics, application security, threat observability, software delivery, business observability. So it has its kind of like its toes in a lot of different places, and so it's kind of nice if you need to keep monitoring of those different places because it can do all of that for you. So that's kind of a little bit of background on what they do and kind of how they operate. So let's kind of dive into the report. So we have the second quarter fiscal year 2026 results. And it's not too bad. We'll see how they do right here. Some of the more highlights: they have the total AAR at 1,899 million, an increase of 17% or 16% on a constant currency basis. As I go through these highlights, I just wanted to mention the article states all growth rates are compared to the second quarter of fiscal 2025, so just the year prior, just for reference. Total revenue is at 494 million, an increase of 18% or 17% on a constant currency basis. Subscription revenue is at 473 million, an increase of 18% or 17% on a constant currency basis. GAAP income from operations at 73 million, and non-GAAP income from operations at 153 million. GAAP net income per share at at 19 cents, and non-GAAP net income per share at 44 cents on a dilutive basis. So not too bad, up just about most categories. Not too bad either, being around the 17-18% mark either. Pretty good. There's also some other, I would say, bigger news about the company that's worth noting as well. They did announce a multi-year strategic collaboration with ServiceNow for advanced autonomous IT operations to empower customers to drive better outcomes, optimize services, and provide seamless digital experiences. So not too bad. They also said they joined the GitHub Model Extent Protocol registry, reinforcing Dynatrace's support for open modern cloud ecosystems to help developers to quickly discover and integrate AI-ready services. Great to see. They also said that their annual contract value went from seven-figure deals closed in the quarter to 53% year over year, all of which were in collaboration with partners and nearly all leveraging end-to-end observability. Good to see there. And then they also say their subscription licensing models achieved a major milestone with 50% of customer base and 70% of AAR now leveraging this flexible and scalable subscription approach. And then finally, I did want to mention that they did have a share repurchase program. During the second fiscal quarter of 2026, Dynatrace spent 50 million and repurchased 994,000 shares at an average price of $50.27 under its $500 million share repurchase program. From the inception of the program in May 2024 through September 30th, 2025, Dynatrace has repurchased 5.3 million shares for 268 million at an average price of $50.05. So not too bad either. So I would say overall pretty good for Q2 2026 for them. I'll let Matt kind of go over the financials and we'll take a deeper dive into that.
Okay. Thank you, Dom. I appreciate it.
Yeah.
All right. So like Dom was saying, I think that the company overall has been doing quite well, and I'm gonna go ahead and share my screen, and we're gonna check their future free cash flow growth, and of course, very important. And currently, they're at 472 million. Next 3 years are gonna be 724 million. So not quite a double, but again, they're fairly close. The growing is still there's still some level of growth, I would say, overall. The financial health of the company is actually going to be really good. No debt, a lot of cash, a lot of equity. So can't complain with anything here. Looks exactly how you want it to. Looks perfect. So no complaints here. Now, when we see the DCF, it's 5% undervalued. Okay. That is Wall Street. But when we check historical growth, it's 38% undervalued. So I would probably go by historical growth on this one, because that's going to pretty much more or less come right into line with Tipranks. And Tipranks is looking a little different. That's because I'm using Interactive Brokers Tipranks, and it's the same thing. So 13 buys, 3 holds, you have 36% upside, low 50, average is 60. It's currently trading at $44 a share. So you're actually getting shares cheaper if you choose to purchase under the own company, because they chose $50 as their share repurchase price. So I think overall it looks pretty good. I really don't see any complaints here. Dom, is there anything else you want to add?
No, definitely looks decent.
Yeah.
That's for sure.
Yeah. Okay. All right, everyone. Thank you, Dom. Thanks, everyone.
Thank you.